is starting to get serious, folks. They release a lot more information today, right? We'll try to get through as much of it as we can. This article is titled World Federation of Exchanges. See, the big timers are getting involved now. Well, they're coming forth with their information now. The World Federation of Exchanges explores CBDCs in correlation with tokenization. All right, so now let's just jump right into it. The World Federation of Exchanges has published a paper, so you can go read it if you want. A paper exploring the potential impact of central bank digital currency on the adoption of tokenization. See how they're pulling it all together? They've had this planned out for quite some time. When they start releasing information, just understand that this is something they were already sitting on. They've moved past it, which hence why they can release it now, right? But this is not where they're at now. That makes sense? But let's keep going. The WFE is an industry body representing the world's largest stock exchanges and clearinghouses, including central counterparty CCPs. These are amongst the organizations that will be most heavily affected by a shift to tokenization. Heavily affected. All right. So the power that they're going to gain is going to be increased. Transparency is going to be increased. But let's not forget and let's not pretend that value is going to flow in. They know it. That's why they're all talking about it. All of them are talking about what? Tokenization. Trillions upon trillions of dollars, folks. They're all getting ready. What does the article say? Oh, while retail is selling, the companies are buying. Let me just tuck this in. Sorry, that just distracts me with that little shine. The companies are buying. There's something major coming. Golden age, yes. I know a lot of people they don't want to accept it. That's okay. It doesn't matter whether they accept it or not. Right now, given all the information we have, this is a reality. Simple as that. But let's keep going. And then you see, this is why you have companies like Ripple expanding their custody services, expanding acquisitions of all different kinds. They're saying they're going to continue that. Makes perfect sense. New financial system right over the horizon, right there. And this is not it. Once again, there's more. Let me get through this, and then we're going to get to. Just wait until you see the other articles. Everything's making sense. It's all being pulled together. It says these are amongst the organizations that will be heavily affected by a shift to tokenization. One of its members, Switzerland's sixth digital exchange, already supports a pilot WCBDC. That also now, because of this focus, brings back the thoughts of when they were talking about, hey, we're going to step back from retail CBDCs. A lot of these central banks said that, and we're going to focus on WCBDCs because it's beneficial to them. I told you, they want that power. They want that value. So now let's continue on here. Quote, the Swiss experience demonstrates the utility of efficient CBDCs to the success of tokenization. You have BlackRock talking about tokenization, Ripple talking about it. Now you have this World Federation of Exchanges talking about it. Everything's going to be tokenized, and they want that value from everything. You see, right now, the way that all of these different assets and mechanisms are being used, it's like a sponge only being partially squeezed. Well, they want to squeeze everything out of that sponge. They don't want to leave anything left. And that's what DLT is about to bring, that opportunity. Now, let's scroll down a little bit here. My apologies. I'm looking at these different sections here. They're all potent. I have to choose. We don't have enough time to cover everything. CBDC challenges. Regarding challenges, it highlighted the inability of DLT to listen to what they said. Highlighted the inability of DLT to keep up with settlement of microsecond transactions, as if the legacy system can do that. They can't do that. So what does that tell you? Remember, I was talking about, and we saw a bank, it was reported. Remember, I was telling you about quantum computing. Although you haven't seen it spread widely, it doesn't mean it's not going to happen. Right now, with the advancements that have been taking place, and with proof that banks have been experimenting. They've tried them out. We read the articles that quantum computing will be combined with DLT. And then you're going to have transactions. I mean, who knows how fast the transactions can be at that point. But definitely microseconds are in the cards for sure, which is why I think they're doing that. They're having that experimentation right now. Same thing happened with AI. They started using it behind the scenes. Then you saw it become mainstream. And while it was becoming mainstream, when it was super hot, there's all this talk about combining it with DLT, which it will be. All right. So now WCBDC initiatives grow globally. For WCBDC, matters are moving in the right direction in many major jurisdictions. Switzerland is the first. Switzerland. Interesting. What was going on there? Were any Bitcoin companies heavy over there? Right. But the EU recently announced an interim RTGS DLT payment solution. Right. They had to have that DLT aspect there. Right. It's going to take over. It says to be followed by plans for a more comprehensive WCBDC. That was in response to regulators being pleasantly surprised by the appetite from industry during last year's Eurosystem trial. So they have an appetite for DLT. They're telling a lot here. A lot. Okay, so now let's move on here because I went from that. I went directly to the World Federation's website. Yes, I did. It's world-exchanges.org. Okay. And they have a post here. It's titled CBDCs could accelerate push towards tokenized ecosystem. Now, once again, you had Ripple come out recently saying how they're working with a bunch of different central banks. This is what they said, which, given that they've only announced a few by name, means that they must have many, many more that they're working with that have not been named, correct? So what we're covering here is very, very significant. Very significant. So this is what this post says. Let's just read a little tidbit here. It says the World Federation of Exchanges, the global trade association for exchanges and clearinghouses, has published a policy paper highlighting the advantage of CBDCs. Tokenization would see the advent of major benefits to the financial industry, including fractional ownership. This is what I've been talking about. Everything's going to be fractionalized. Everything. They want to squeeze all the value out of that sponge. It says allowing multiple investors to own a share of an asset, thereby lowering the capital requirements for individuals. Look how they put that at the top. That shows you it's one of their key focuses. They wanted you, before your mind got tired, the reader's mind got tired and wanted to move on. They wanted to make sure this was early in this document for you to see this and have it on your mind and take it in, absorb it. Investment, the whole market ecosystem, from exchanges to banks and asset managers, would need to invest heavily. Read that again. Would need to invest heavily to update legacy systems to expedite settlement time to an appropriate level so they can be used as settlement assets in many trades. Listen to this. They're telling a lot here. It says small and medium-sized firms or new entrants into the market might find it difficult to comply with the infrastructure and technological demands required to integrate with a CBDC system. And this is what I'm talking about. See, they don't have to go through the central bank's direct system, although that system is built for them as well. It's not like they built it themselves. They didn't. But companies don't have to go that route. They can go through Ripple or Chainlink, Solana, etc., and have a customized offering that connects. It has a universal connection. It could, and they will achieve universality, if that's a word. Just like what did they call it? There was a word for it a long time ago, and I remember learning about it in a correlation with quant. It's like they're neutral. They can move. They can connect to anything. I don't know what I forgot the verbiage for it, but some of you might know out there. But it's like there's a way you cultivate your chain where it can connect to anything, right? So that's what I'm talking about. And that is what they'll do. And then they'll connect it to the central bank system, right? It says this could create a higher barrier to entry. Cross-border settlement. They cover a lot of things here. The benefits CBDCs bring to enabling cross-border settlements will make regulatory oversight more complex. With differing legal frameworks for CBDC use, the lack of regulatory harmonization between different countries, CBDCs could create bottlenecks and legal disputes. Yes, but we also heard the solution to this, which will be done by AI and smart contracts to make sure everyone is in compliance with each other's legislation or regulations, rather, automatically, right? So that's going to solve that problem. They won't be able to step on each other's toes, right? So now let's move on here because we have, like I said, that it wasn't just that. We have more. They released a lot of information today. So this article is titled Federal Agency Clarity Will Impact Policy for Crypto Custody and Banking. We're hearing a lot about crypto banking, a lot these last 2 weeks. Why? We're inching closer and closer to that bank money. All right. So now let's scroll down here and read what they're trying to convey. The cryptocurrency growth roadmap has moved from the fringes to the financial mainstream in America. The reason, as the digital asset ecosystem matures, Washington's own evolving regulatory stance is poised to potentially reshape how banks and custodians engage with digital assets. Now, I like how they phrase this here. And by that, I mean, I find it interesting that they say, as it's maturing. Yes, is it maturing? Yes, it is. But at the same time, it's happening this year because they wanted it to happen. What we're seeing now could have happened 2 years ago, 3 years ago. Actors deliberately chose to stand in its way. So no, I don't want to just write that off. No, that's very important to keep in mind because it means that this is all a setup. It was set up to be this way. But if we know it's a setup, we also know that there is an outcome that they're looking for. Are they looking for a negative outcome? Of course not. They want their system to continue on. They want their system to grow and be flooded with value and for them to have more power. So there must be, using deductive reasoning, there must be a positive outcome to this. So what could the positive outcome result in? More power for them, more value for anybody involved in a system holding these assets or utilizing the systems. So there must be a positive outcome. So, all right, but let's continue on here. So that's why that's important to keep the facts in mind, in my humble opinion. Federal agencies, including the SEC, Federal Deposit Insurance Commission, and the Federal Reserve have begun to clarify their positions, reversing or softening previous warnings and setting the stage for greater integration of the crypto assets into mainstream financial system. Once again, although this is stuff that we're privy to, they must retrace those steps. And just in case anyone's not familiar with what has been, many people are not, although we may be. It says, quote, "It is important for the SEC to grapple with custody issues, which are some of the most challenging as we seek to integrate crypto assets into our regulatory structure." This is what I'm talking about. So this is going to be a permanent solution. The new financial system will be involved in almost everything. The new financial system itself is but a part of the new system as a whole. There's a new system as a whole moving in, but we're just looking at this small sliver of it that we call the new financial system. But let's continue on here. I'm going to scroll down. I want to get past the SEC stuff. The rise of crypto assets in banking. It says, in parallel, both the FDIC and the Federal Reserve have updated their guidance on crypto activities by banks. In the wake of the crypto sector's ongoing turbulence, both agencies had earlier issued policy statements warning banks of the risk associated. Okay, we know that part. I want to get past that part and get to the positive aspects here, but we're familiar with that. That's what I was just speaking about, the time period where everything was held back. All right, and kneecapped. On Thursday, the FDIC formally withdrew several prior warnings that had broadly discouraged banks from crypto involvement. They're unleashing the banks a little bit more each week. The banks are going to play big time. That bank money is going to flood something. Ripple claims they have tons of banks. We're going to find out. Over the next year or 2 or 3, we're going to find out. Crypto is being unleashed. More news, bigger and bigger news being released every single day. And it's getting more bullish because of that. But let's continue on. The agency emphasized that banks remain responsible for assessing the unique risks of digital assets. But here's how they're resolving that. Part of that, as we're finding out from research, they're taking over. They're taking over. So once the takeover is complete, and who knows how much percentage of crypto or DLT they're going to control, they're not worried about risk at that point because they control it. They control it. They manipulate it. Yes, that's all going to happen. Yes. And so there's that. The positive aspect of that is that these prices can explode higher than what anyone can possibly anticipate. It says here, possibly, right? Potentiality, not financial advice. It says, but clarify that, quote, engagement in permissible crypto-related activities is not precluded, provided appropriate controls are in place, unquote. See, that's what I'm talking about. What do they mean by appropriate controls? What do they mean by that? So let me clarify. If you were to take legacy system rules right now, why couldn't they just move that over to crypto and that suffice? Why? So my logic would say that they have already been doing that, are going to do that. That's not what they're talking about. What do they mean provided appropriate controls? So in order to have appropriate controls, you would have to necessarily have a sufficient amount of power over that system to be able to say this happens here, that happens there, correct? So they must take over that system. They must, it doesn't matter in which way they do it, but mostly it's going to be with their influence, their connections with companies like Ripple or Hedera or, et cetera. And through them have all of these different requests and relationships where their will is iron. Their will is not encroached upon. Does that make sense? That's what I believe they mean. It's a takeover, to boil it down, to sum it up. But let's keep going. Implications for banks and custodians. You see how much we're getting through? We're getting through a lot today. For banks and financial institutions, the regulatory thaw opens new opportunities. Told you. They want that value. They want that money, and they want their customers back from non-banking financial institutions, mostly the legacy system non-banking financial institutions who they've been at war with for a long time. They've been complaining about for a long time. Folks, you're about to see a money war, a money arms race. Because they have to have it. They have to. The more value they have, the more they can reallocate, the bigger they can become, the more power they can grab, the more that they can stomp on or defeat their enemies, the NBFIs, the shadow banks. They feared the shadow banks for years. We've discussed it. If you go on Google and type in shadow banking system or banks versus shadow banks, you're going to open up a whole world of information that clarifies what I'm talking about here. This is their opportunity to finally compete with and overcome the shadow banks. So now, let's see how much time we have left. Okay, I want to cover more from this, but I also want to, I had some XRP, some raw XRP news, although all of this is Bankcoin news so far. I have some Bitcoin news. I have a lot. I have some Hedera news. Let's see what we can squeeze in here, okay? Wow. Let me just read the headline to you. Ripple's XRP to see billions in inflows from Wall Street following heightened XRP ETF green light. All right, so we know there's a lot of positive things happening with the ETFs, although I think there's some uncertainty right now. Let me read this first sentence to you, and then I'll clarify what I mean. ProShares is launching 3 futures-based XRP ETFs on April the 30th. Yes, but I also saw one article. Let me clarify. One article, so maybe they're wrong, that said that may not happen on April 30th. So I suggest doing independent research and going out there and finding out what's the truth. Is it going to happen on April 30th? Is it not going to happen? All right. So I'm just putting it out there. I did see that. But nonetheless, positive things are happening as far as XRP ETFs and hopes for one or a few. So now let's move on from there. go here to a little bit of Bitcoin news. Get a little bit of that in here. Bitcoin targets $115,000 as Bitcoin supply metric nears historic euphoria zone. Bitcoin's profitable supply nears 90% as strong buyer demand signals a potential rally toward 115,000. Bitcoin supply and profit has climbed back above 85%. Nice. Nearing the classic euphoric area. Next bullet point, on-chain data shows strong accumulation from new and momentum buyers with minimal profit taking. Who's that? Who have we been reading are the new buyers? Who are the momentum buyers? They're just continuously buying, right? Who's that? Right. Bitcoin's getting more bullish by the day. Next bullet point, Bitcoin could rally toward $110,000 to $115,000, helped by a, quote, max buying, unquote, zone. All right, Bitcoin, do what you do. I'm ready. Whenever you are, I'm ready. As of April 28th, approximately 86.9% of all Bitcoin coins were in profit, according to on-chain data resource CryptoQuant. Historically, the metrics climb into 85 to 90% range has signaled a transition from healthy optimism to speculative euphoria among traders. Between October and December 2024, for instance, Bitcoin's price climbed from around $80,000 to over $100,000, a rally coinciding with Bitcoin's profitable supply, rising from under 80% to as high as 99%. In his April 28th post, CryptoQuant-based analyst Dark Frost reminded that Bitcoin's euphoric phases may not last for longer timeframes, leading to sharp corrections as holders begin realizing gains. We'll see. This time is different. The catalysts are different. The big-time buyers are different. They're companies this time. So everything has changed. What we have known must be adjusted. Change is the only constant. Yes? All right. Now, let's move on here. Squeeze in one more article, probably. Let's see here. I want to get this. Let's get this HBAR news in. I want to hear what they're doing. I want to keep up with what they're doing. So, HBAR price rises as Hedera makes a key RWA partnership. Really? All right. Let's find out what partnership they just made. Hedera Hashgraph's token may be on the verge of a strong bullish breakout after forming a giant falling wedge pattern. We shall see, right? The price of Hedera was trading at 18 cents on Monday, slightly below that last week's high of 20 cents, its highest level since March 12th. It is about 51% above its lowest level this year. Yes, but what partnership? I want to hear about the partnership now. Hedera reacted to the latest integration with Tokeny Solutions, an infrastructure network used by companies like ABN AMRO, Credit Agricole, and BNP Paribas. Oh, okay. All right. I'm not surprised, but I'm enthused. I'm happy about that. Hedera is powerful. They have powerful connections. About time they start using them. I'm expecting to see a lot out of them the next year or two. They can do it. So now, Tokeny has over 120 customers and has helped tokenize over $28 billion in assets over the past few years. This integration enables institutions to bring assets onto Hedera in just a few weeks using its white label solutions. And Hedera is very powerful. I think a lot of companies are going to love working with them. Hedera's network activity, and they're very, very secure. Hedera's network, at least that's what their white paper makes it appear to be. All right. Hedera's network activity also surged, with the total market cap of all stablecoins on the network jumping by almost 40% over the past 7 days. Hedera now holds over 113 million in stablecoins, up from 26 million in January. A big increase in stablecoins is often a sign that activity on a network is rising. All right, so things are looking good. Things are looking very, very good. Is there anything else? Let's see here. Anything else about All right, so then they just go over some pricing activity, stuff like that. But I'm happy to hear about that partnership. I'm expecting much more out of Hedera in the future, so we shall see. We'll keep our eyes open, try to stay abreast of everything. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.